So today's video, I just want to talk about when you can put food costs through your business. And this video, I'm specifically talking about subsistence costs. So what is subsistence? If you're out and about on work-related business, you can sometimes claim for the food costs. If you had to stay away, if you had to go somewhere and you had to get a meal, you could put it through your business, reclaim the VAT and get a tax saving on it in terms of corporation tax. And just as importantly, it's food that your company's paid for, so you don't have to take it out, pay dividend tax on it, or pay employee taxes on it. So this isn't a comprehensive video about food, because a couple of videos ago, I did a video about the 5 types of food expenses. Subsistence was number 1 on that list. I'm just going to do this video about subsistence, and then I'll do some more videos about the other types over time. If you want to get a recap of the whole idea of claiming food through your business, then go to my YouTube channel or look at some of the previous posts and you'll see that. So what is subsistence? Subsistence is essentially claiming food when you're traveling for work, and not just traveling for work. Potentially if you're working late, I'd normally call that meeting costs. Let's say you're traveling for work or working outside your normal pattern of work. The biggest mistake people make with subsistence is they think that the rules around claiming food expenses are similar to the rules around claiming mileage or travel expenses in a business, and they're not. Mileage or travel expenses, typically you have your main place of work, and then wherever you go outside that main place of work, you can claim the travel expenses too. The rules around subsistence are different in terms of tax deduction. If your job involves traveling on a regular basis within a certain area, then you can't claim your lunch expenses. I know there's some accountants out there saying, yeah, we'll get you all your lunch claims back. You don't pay us anything. We'll get the money off HMRC, deduct our share from that, and you get yours. Well, that's a scam. It wouldn't be fair to call them accountants either. Apostle Accounting, that's probably the most famous one. They defrauded HMRC out of £3.2 million. 800 of their clients got an inquiry for this. So I thought what I'd do is just explain it, because whether they're trying to sell you this kind of scheme or you need to know for your own business, the rules around claiming food are different from travel. The idea is it's meant for anything outside of your normal pattern of work. What does normal pattern of work mean? It means the hours you work. If you normally work 9 to 5 and then one day you're working 7 till 3, that is outside your normal pattern of work, and then it's reasonable to claim your breakfast costs there. If you normally work, it could include overnight stays. If you have to stay somewhere overnight, and that is outside of your normal pattern of work, so yeah, you should be able to claim your food costs. But you might be going outside of your normal area. So if you're an electrician, for example, and you look after houses in Northampton, and then suddenly you've got a job in Norfolk somewhere, you should be able to claim, even if you're back within your usual hours of work, because you've gone substantially outside of your normal area. You should be able to claim costs for your subsistence on that kind of job. So that's the main thing, outside of your normal pattern. And it is different from travel, because travel is just anywhere that's not your usual place of work, but this is outside of your normal pattern. There's 2 ways to claim subsistence: put the expenses through your business in terms of actual costs, or get your business to reimburse you if you pay for them yourself. Keep the invoices or receipts. The VAT on them means it gets a corporation tax saving. It means because you didn't pay for the food yourself, you don't have to pay any dividend tax to get that money out, or employee taxes to get that money out. So that is a win-win for everyone. The alternative method is claim the flat rates. I'm not going to explain what they are here, but you can go to our website and look at the article about this. It's got a table with all the flat rates. If you claim the flat rates, it means the business just pays you that money instead of actually reimburses you for the actual costs. If you do claim the flat rates, you still need to provide receipts for what you actually spent, because the flat rates give you a corporation tax saving. However, if you want to reclaim the VAT on those expenses, then you'll still need the receipts. That's how you essentially claim it. If you've got any questions about that, do get in touch, and I'll see you at the next video.